We have the Fed this week. We have earnings this week, important earnings. The jobs report on Friday, the Fed meeting, and Powell's press conference there on Wednesday, the last day of the trading month. We've got big earnings this week, and then we wrap up the week on Friday, August 2nd. We wrap it up with the jobs report. It's supposed to come in at 190,000 and above 200,000 last time. We saw the unemployment rate tick up to 4.1% last time. If the 3-month moving average of the unemployment rate goes higher, we'll likely be predicting a recession with this report. It may drag out a couple of months before we get that, but if we do get at this report, it will be predicting a recession. So we'll be watching that on Friday. The 3-month moving average, the unemployment rate is higher by 0.5% from the previous year. It predicts a recession. The inverted yield curve it's uninverting right now, moving towards a point of uninversion, again, is also predicting a recession. We had the Dow slightly lower, even though McDonald's rose with earnings up over 3%. Dow still ended down 49 points lower. The S&P ended just under 0.1% higher, up 4.5 points. NASDAQ was up 0.07, and just some choppiness and more or less flat today, slightly higher on S&P and NASDAQ, slightly lower on the Dow. The Russell was down by over 1%. The VIX was up by 1.25. It got a doji today. We got really important earnings this week. Some of the Wall Street darlings, a lot of S&P stocks. Tuesday, we'll get PayPal, we'll get Pfizer, and other important stocks before the market opens. After the bell, we'll get AMD, we'll get Microsoft. So some important earnings there. Day of the Fed meeting, we'll get Boeing before the bell opens. After we have the Fed announcement, we'll get Meta through the close on Wednesday. On Thursday, the close will get Apple, Amazon. In addition to that, we'll get Intel and Coinbase. And then we'll end the week with Exxon, Mobil, and Chevron. A lot of other important earnings, can't name them all, but those are the highlights. After the bell each day, again, AMD and Microsoft after the bell on Tuesday, tomorrow. Meta after the bell, after the Fed meeting there on Wednesday, and then on Thursday, Amazon and Intel. Those are the big ones to be watching. Amazon and Apple. Really going to be the market movers, so just some things to be paying attention to every single day after the bell. Tuesday, Microsoft, Wednesday, Meta, day Amazon, and Apple. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, let me know that by supporting the channel today. Take a moment to step up to the plate and help out. I would really, really appreciate that. If you could take a moment to do that and partner with me, it would be very, very helpful. Again, I don't have any sponsors. I turn all that stuff down, just a direct relationship with you. It takes a lot of time and effort to do this. So if you could what you can right now to help out, I would really, really appreciate that. I thank you for that. Just quickly, I want to make you aware that we're going to get a possible 9 count on the S&P tomorrow. If we push below this low, it will be a perfected signal. Even if we don't, you still got to push below this low right here, the bar from 4 bars ago, to complete the 9 count. Otherwise, it gets canceled out. So if we start selling off, we drop below that bar from last Wednesday, then you've got a shot at. We did get an inverted hammer right here, but far it's not been confirmed as a reversal bar, and again, signals remain bearish. But the 9 count could be suggesting we're getting closer to exhaustion here. You had a 9 count, and we talked about that at the time. You still went higher. Sometimes you go higher, and then you get the sell-off. NASDAQ, we got the 9 count, and we peaked that very day. Wanted to make you aware of that. For it to be a perfected signal, bar 8 or 9 has to be the low of the count, so we'd have to drop below this low. So we'll see if that happens. Even if you get a 9 count, you drop below this low, you got to take out this low to have it a perfected bullish signal. Back on the 10th, we had that 9 count. I told you with that 9 count, on the 11th, we had the 500-point sell-off. I told you we were going to rally back up and get a lower high into the golden pocket, likely the 78.6 Fibonacci. We hit it right on the nose, and then we've had this sell-off. Now, sometimes the 9 counts mark tops immediately or bottoms. Other times go beyond that level, like we saw with the S&P. So I'm just making you aware if we might get one on the S&P. We still have a 4 of a 9 here. on NASDAQ. So again, there still might be more selling pressure if we break the trend line, move to a new low. We got a 9 count signal here. It was perfected. We've had an immediate trend extension. Again, we'll see if another 9 count develops here. We've dropped 9.5% so far. I think you're probably going to drop lower. Today we got a spinning top, black candlesticks, which are bearish. So again, it might be we just go on down, watching what futures does overnight here, and then we'll be watching how we open tomorrow. If we try to get a bigger rebound towards the 50-period moving averages on the 60-minute charts, but again, I think you still got a good shot. We're going to try to take out these lows. Signals remain bearish. Again, I think there's a good shot that a bottom forms. The question is last Thursday's low it, or do we get one more push down? There's a good chance we see those divergences form on the 60-minute charts. We can get one more leg down and even break the trend lines. Bitcoin did that. I talked about it over the weekend, but then still rebounded and went back up and testing the highs. Bitcoin's at major, turning today off major resistance. I've been calling for a move to the 70,000 area. We hit it today and we reversed hard off of it because it was major resistance. So here today, we went higher, we pulled back to the 200, we went back up and tested this trend line again a couple of times, and then turned off of it and tested the 200, slightly breached this trend line. NASDAQ rested right on it at the end of the session, but we're right above the 200. So if we start breaking down, then again, we'll be turning off of the gap resistance area, just below gap resistance and off of this trend line. If the S&P try to rally, then we'll be watching the gap resistance and the gap fill directly overhead. If you try to fill or make an attempt to move to gap resistance, you can hit the 50-period moving average if you don't break down immediately. But again, we're just, we're coming up off of these lows over here, this little double bottom right here. And again, we've just kind of gone sideways, kind of a triangle, but turning off of this resistance and then bouncing off the 200-period moving average several times in the last 2 sessions. 15-minute chart, if we, and here's the broken trend line, if we go lower, again, you still have this trend line right here, but it still develop a larger triangle. But if we can climb higher and test gap resistance right here, I try to hit the trend line and hit the 50-period moving average on the 60-minute chart. If we can attempt to rebound here, you got your 200 period here on the 15-minute chart directly overhead. So we'll be watching. Again, we're just kind of going sideways here the last couple of sessions as gap resistance is holding. If we move to it, you've got the 200 here, you've got the trend line right here from the peak. So again, that's an important trend line. It might be tested. And again, gap resistance, you might just come up to these levels. And again, I probably should include the shadow a little bit on that there. I think I excluded it with my trend line there. But if we include the shadow, it's probably right there. Yep, right there at the gap resistance and our 200-period moving average. That's where the 50-period moving average is coming in on the 60-minute chart. So I'll be watching to see if we attempt to reach that level. Some important trend lines I'm watching here on the intraday charts. Here on the 15-minute chart, you have the 200, you have the trend line, you have gap resistance. Look at the 60-minute chart. Here it is. It could be a consolidation, continuation of the trend. Should we go lower, you could even be forming continuation triangle. Again, we did breach the trend line right here ever so slightly. And again, you have another trend line from these lows back over here. But if we can rally higher, if we can clear the highs over the last couple of days here, again, you've got your 50 period, which is crossed, getting a death cross below the 200, the 50, the green line. And you've got, again, this trend line right here that is directly overhead right at it, along with that 200 period on the 15-minute chart. So if we could try to rally, you might hit the 200 in the trend line and then go down. If you can't get any traction back up, then look out below. But again, you've got this trend line that I talked about on the 5 and 15-minute chart, and above that, you've got your gap resistance, you've got your 50-period moving average. So we'll be watching this level, and you've got your downward trend line. Again, probably should include the shadow there a little bit. I slightly excluded it, but if we include it, again, you're right there at that gap resistance level. So again, just something I'm watching. You've got this channel going on down here on the 60-minute chart. And you could still see another leg lower and form a divergence here on the RSI. Now, let me just tell you, the RSI, it only looks at the closing price. So really you have it right here. You do have a divergence on the RSI because we exclude the shadow. You did go lower on a closing basis. So you did get it technically on the RSI because it only looks at the close of each bar. But on the MACD, you didn't get it. You got a higher low, a confirmation of a higher low if break out and start going back up and filling the gap up here. Now, let me just say this. Eventually, I think we're going to go back and fill the gap here, and I think you're going to come back up and fill the gap way up here at the top, but you could still get one more push down. I think you're going to try to bottom this week with earnings and with the Fed. Be surprised to see another leg lower and complete a divergence first on the MACD and, if you will, complete one on the RSI or get another reference point of it. Like I said, we already had it. The shadow, the RSI does not look at that. It only looks at the close. The RSI got a higher low, price got a lower low based on closes of those 60-minute bars. That's what I'm looking for, but again, I think we can get a bottom, and I think the gaps go back up. I think the S&P still has a really good chance of moving to a new high. Can bottom out. I think you got a pretty good chance we're going to try to bottom out. I think is peaked, if NVIDIA has peaked, and the semiconductors, and I think NASDAQ will up to fill the gap and get a lower high. Again, the S&P formed this negative divergence on the daily chart on the RSI. The MACD rolled over, moving to a new high. We had the breakdown from this rising wedge, gapping lower. Came down. We broke the trend line. We broke the 50-period moving average. I'll show you the trend line in a moment. We got back above them. Now we get a black candlestick today, but you got the 10 below the 20. We're still above the 50, and price got back above the 50, but my guess is we're probably going to get another leg push lower, and then I think you could try to form a bottom. And let me be clear. Remain bearish, okay? And again, we're getting oversold, and if you form a divergence, you get one more push down, you might, on those 60-minute charts, you might try to carve out a bottom, break the trend lines like Bitcoin did, and then get back above them and rally big like Bitcoin did. The market is now following Bitcoin. Sometimes Bitcoin follows the market, other times the market follows Bitcoin. Currently, they have a negative correlation. Longer term, though, we've had this short period of decoupling, but longer term have a positive correlation. I believe they will end up having a positive correlation, but right now they're forming divergences with one another. I did a whole video about this in my last update. I'll link it at the end of this video. Bitcoin is diverging with the S&P 500. Get another reference point. Bitcoin, if it sets up another lower high right here, and the S&P bottoms out and goes back up and makes a higher high, you have another reference point, and then again, what happened at the 2022 top. S&P, I believe, is in a topping process. The decision is going to be made right now. If we're going to try to bottom out either with Thursday's low or another push down and try to bottom out, okay? Try to rebound and fill those gaps. But the institutions have to stop selling. If the institutions keep selling, guess what? We're going all the way down. If they keep selling, the signals remain bearish, then we're at risk of going back and filling some of these other gaps and coming all the way back down to 4,900 here to 4,950 area or so, which is a neckline for the head and shoulders. Could be we bottom out, go get another leg down, come back up, and then come back down here, and this pattern still plays out. But decision's about to be made. Are signals going to remain bearish, or are we going to see divergences begin to form and carve out a bottom, or will we build upon the low that we made? Will we build upon the low that we made last Thursday? This is we're going to get another push down and probably try to bottom surrounding the Fed meeting or earnings. I think you're probably going to go back up and fill these gaps here and up here, which means that the S&P will probably move to new high because the gap was at the top. It wasn't that way with the NASDAQ. NASDAQ's taken a bigger hit than the S&P, so I think that the NASDAQ, if it does bottom out, which I think it will set up a lower high. But you are at risk of these head and shoulder patterns if we don't get a rebound, if we don't get a bottom, but signals remain bearish and keep going lower. We'll be watching to see if we bottom out and then momentum tries to turn back to bullish. If we drop back below the 50-period moving average, tomorrow with the Fed day, again, you can get another push down. Push higher, again, you got gap resistance and the downward trend line, and again, 50 period on the 60-minute chart, the 200 on the 15-minute chart, and directly overhead is the 10-period moving average. We might test those levels if we try to rally to gap resistance and have the move fail. Assuming that we can rally early on tomorrow, we'll be watching these levels. If not, look out below, you lose a 50, and we can resume the sell-off. S&P is trying to bounce off this trend line right now. We broke it, we got back above it. It may be that we break it. Bitcoin broke it, and then we got back above it, and Bitcoin rallied up to resistance. S&P and NASDAQ may do the same thing. You do have this larger head and shoulders, so if we break it, don't carve out a bottom, but keep going. Then again, you're at risk of going to the 200 period here and the horizontal support at 49.50, which again, possible head and shoulders. So if we bottom out, then again, it's still possible we go up and we either form a divergence here with the previous divergence, or you get a brand new fresh divergence forming with the next rally up, should we attempt to fill those gaps. No guarantee, listen to me, there's no guarantee we fill the gaps. If the market is in a topping process, I think there's probably a pretty good chance that we do. There's going to be some short covering if we drop lower. And if we bottom and we go back up, you'll see more short covering as we try to rebound back up to fill these gaps. And I think also the buy the dip crowd will likely. Well, the S&P slightly broke its trend line here in the 5-minute time frame. NASDAQ's right at it. And again, we're right at that level. Both of them are right at the 200. If we try to bounce, then again, here we have the peak from July 25th. And again, that's held as resistance right here. Directly overhead, again, you've got your 50-period moving average. Let me show you the 15-minute chart. You got gap resistance up here. Again, we're pretty far away from it. S&P's closer. But you got the gap resistance in your 200 as, again, we're going to be getting all these earnings in the Fed meeting. So we'll see, do we break down? Is the next move another leg down, or do we bounce and then get another leg down or closer to it? NASDAQ's further away from it. 50 periods up here by the trend line. Again, gap resistance well above that there, and then the gap fill up here, and the gap fill up here at the 20,400 area. Told you way back over here with this divergence that was developing. But again, peak there on July 10th. I told you on the 11th, 500-point sell-off. I told you a very good chance that's the top. Get a rebound back up to the Fibonacci retracements and probably get a lower high. S&P diverge with NASDAQ. That's exactly what happened. Hit the 78.6 Fibonacci on the nose, and I told you we were going to get a sell-off. NASDAQ probably peaked at that time. I told you that on July 11th. We could sell off. But because the S&P began the sell-off, here's NASDAQ. It gapped down with a lower high. S&P gapped at the very top. It diverged there with the S&P with NASDAQ. I told you when we saw that gap that very good chance P still goes back up and fills that gap at some point. You always want to watch a gap. Is it a gap and go, a gap and fill, or a gap and trap? This was a gap and go. We just gapped down and we just kept going, and you're getting the series of lower highs and lower lows, and you're probably not done. Back up here when we gapped, I talked about the gap down here at 19,210. We reached it. We're trying to rebound off of this level here, filling this gap, but we're kind of stalling right at it. We dip below it, and then we're down, but we're stalling at that area. And the support and resistance line right here, which we turned off of over here, that's that little orange line you see right there. And if we get another push up and drop, or if we just drop immediately, I think you can come down to this gap at 18,653, violate the trend line, but then I think you can bottom again. Bitcoin violated the trend line, formed bullish divergences, and then bottomed out and had a big rally back up. And I think you could see the same thing with the NASDAQ and S&P. I think the RSI can come down here. Maybe we go up, hit the 50, or move towards it anyways, and then come down. Maybe we just do it immediately. I still think you got a good shot with these divergences, but again, it's possible. Listen carefully. It's possible Thursday's low was it. My guess is it wasn't. My guess is we're going to get another push down either with earnings or with the Fed. I think you're probably going to carve out a bottom forming these bullish divergences and attempt to rebound back up to fill the gaps. Guarantee we do that. Did you hear what I just said? No guarantee. If the selling continues, break the trend line, and signals remain bearish, signs of a bottom, and we just continue lower, have to form multiple points of divergence before you ever get a bottom. Guess is that we're going to try to form a bottom. I just want to make it clear there's no guarantee that we fill these gaps and signals still remain bearish. Be watching the same thing here on the MACD. Now again, same thing here, by the way, with the MACD. We're looking at the We had a divergence right here still with the, just like on the S&P 60-minute chart, because we got a low shadow and it only looks at the closes. So you did have a little divergence there. Probably get another one is what I'm thinking. MACD at the moving averages, so it's not formed a divergence yet. My guess is it probably will form a divergence, and then we'll see what happens. So again, we'll be watching, do we come back down to this 18,653 area? And again, you've got your Fibonacci retracement of this entire advance. 61.8 Fibonacci is at 18,400, a couple hundred points below this level. So I think that is possible that we move down towards this 18,400 area, which is right there, and try to fill this gap. It's possible we bottom out, and I have a possible Elliott wave count. Elliott wave speculation. Never trade Elliott wave. Counts get invalidated all the time, but I'm watching to see, again, do we have a 3 and now a 4, and we get a 5? Is 4 done, or is it not yet done, and then we get the 5? So we'll be watching that. Or does Thursday's low hold? My guess is we're going to get another push down, but then I think we'll bottom out. Speculation signals are still bearish at this moment, but I think you'll see short covering if we get another push down. Profit taking and the buy the dip crowd is probably going to come back in, and if the institutions will stop selling, you might carve out a bottom. Okay, the daily. Now, one other thing, we have our head and shoulders pattern. I've been talking about this. Again, the measurement of the head and shoulders, I talked about it over the weekend, measures down to this 18,400 area, just beyond the gap fill at 18,653. So again, if we go to the 50 and turn, or if we don't make it there and we just start to turn, this is the level I'll be watching between 18,400, just under 18,400 to 18,653, which is our gap fill down over here, right back over there. But the little head and shoulders is playing out. Eventually, I think we'll come back and fill the gaps here, and again, eventually come back up here, but set up another lower high. I believe that NASDAQ has likely peaked. If NVIDIA has peaked and the semiconductors, I think there's a good chance that they have. Momentum still pointing up, but we bounce off the 200, 5-minute charts and the 50 on the 15-minute charts. Again, we still may try to reach these levels here a little bit higher. S&P is right below the gap resistance area and the downward trend line. So we'll be watching. We try to go a little higher and then get another dump, or if we just try it here. Again, I'm also open-minded to Thursday's low being it, but I need to see more evidence. We're just getting some choppy moves after those lows. The lows we made on NASDAQ and S&P on Thursday, we're just getting some choppy price action on lighter volume. You await the Fed and the big earnings. And I think you're going to get another push down and probably try to bottom. See if this rolls over immediately or goes up to extremes first. If it goes up to extremes, you might try to reach the 50, but I don't know which way it'll play out. But losing those 200s on the 5-minute charts, you're at risk of taking out last Thursday's low. The measurement, though, down here at this 18,000, just beyond 18,400 for the head and shoulders measurement pattern here on the 60-minute chart of NASDAQ. The weekly chart, we're watching the NASDAQ to see if it gets some traction off the 20 or goes down and hits the trend line or even slightly violates it. But do we find a bottom here and then go back up and try to fill those gaps or not, or just break this level and start moving towards 17,000, which is horizontal support, breaking the trend lines. This is the trend line in the linear with the linear scaling here. Scaling, we're already hitting it. And just quickly, here's the momentum on the S&P 500. Again, it's coming up to extremes. Maybe it still goes higher if we attempt to move towards the 50 and towards the trend line and towards gap resistance. If we just start dropping down those 200 period moving averages on the 5-minute chart, then maybe we see this roll over tomorrow and resume the decline. We'll be watching to see how it unfolds. I think you got a pretty good shot. You're going to get another leg down. I wanted to show you the momentum on the 60-minute charts with NASDAQ and S&P there. I think when it's done and when it starts rolling over, maybe that's here, maybe it's a little higher, but when it's done, I think you're going to move down to test last Thursday's low and probably take it out. To be clear, I think a bottom is probably going to try to form. Guarantee of that if the signals remain bearish, but I do think you got a good shot of it. We complete divergences on those 60-minute charts. Possibly see a bottom carve out with the Fed or with earnings. We'll be watching to see how it unfolds. If Thursday's lows can hold, Got to start clearing these levels of resistance, the gap resistance, the trend line, the 50 period, and we got to start seeing signals begin to turn back to bullish. Now signals remain bearish. We'll be watching the monthly close. This is the S&P. Right now it's got a doji forming on it. So again, we'll see what that looks like. Close with Wednesday. Again, it could be we complete a bearish reversal candlestick, still attempt to go back up and fill those gaps, and S&P make it back-to-back bearish candlesticks if it does attempt to fill the gap. So keep that in mind. We'll be watching to see what this candlestick looks like by the close of the month. And with NASDAQ, and again, they may not here rebound. We can get a doji spinning top if we rebound back up. He has that doji. It may get a spinning top or something else. We try to bottom with the Fed or with earnings. We'll be watching closely. Monthly charts, we close out the month the day of the Fed meeting. And NASDAQ and the semiconductors are doing the exact same thing. And again, bounce off their trend lines. We're at extremes here with momentum. So again, we'll be watching. Does momentum find a bottom here like we did over here? And again, with the semiconductors, either breaking the trend line a little bit or maybe Thursday's low can hold and we see it. But again, I still think you got a good shot at forming a divergence on the 60-minute charts, MACD and the RSI. And like I said, the reference point in the RSI, done it on a closing basis. This is suggesting to me we might see a bottom soon, or maybe Thursday's low is it here. You can start seeing signals begin to turn. But I do think you're going to attempt to go back and fill the gap up here, 20,400, rounding up there. Eventually do that, but you could hit this other gap first before all is said and done at 18,653 and our 61.8 Fibonacci at the 18,400 area. This looks just like the semiconductors, and again, NASDAQ's following NVIDIA and the semiconductors. They all have gaps that can be filled, carve out a bottom. Again, NASDAQ did get a black candlestick today. We're getting a bounce, trying to get a bounce off the 100 period moving average just above it. If we drop back down, again, you've got that gap fill at the 18,653 level. You've got your 61.8 Fibonacci of this advance here at 18,000, just under 18,400 right here. So again, just some levels I'm paying attention to. Should we continue to drop? Do we try to bottom? And if we do break the trend line, that's what Bitcoin did. It bottomed out, and then it came back up and it broke that downward trend line, and now it's rebounded back up and it's hitting a lower high right at the resistance I predicted, a move 70,000 area, and we slammed into it. 71,000 major trend line of resistance, so at 70,000 sometimes you overthrow it. Turning off of there, and again, some topping signals on Bitcoin, so we could see a bottom possibly with the market if that is the case. And possible head and shoulders here if we just continue the selling. Then again, the 200 down here, and again, 17,000 down here on the NASDAQ. And that's assuming that the just remain bearish and we don't see the institutions let up. They're controlling this, and if they're going to keep selling, we're going to go lower. Got a shot at a bottom surrounding this confluence of support if the institutions quit selling. And then we can go back and fill the gap up here. NASDAQ has a gap up here at the 20,400 area. And if you do get something like this, again, you could rally, and then you can get a lower high, and you can start to sell off into the September 18th meeting, where we're likely going to get the pivot. And again, you might get a bounce with that, but which might give us a right shoulder if this pattern, if something like this forms, like I've drawn here, if we turn down, turn back up, and then go off further. Bitcoin starts reversing off resistance and dropping, and the market bottoms out and we start rallying back up. Good chance they're diverging with one another. Complete the topping process. Move towards a Fed pivot on September 18th. Means they're going to start lowering rates. If you don't know what that means, it usher in a major bear market. NASDAQ's likely already peaked. The bear market's probably already started, as I've said, saying since this reversal bar on July 11th. We probably peaked on the 10th, as I've said. Have been saying and told you we'd get a lower high and then selling pressure. We've seen all of that happen, but again, it's very possible we attempt to fill these gaps. If we can try to get a bottom, and if as to get a top, again, if the negative correlation between the two continues, I could see the market try to bottom surrounding these areas and our Fibonacci, our 61.8 Fibonacci, which is an important Fibonacci here, our 50%, we've just moved just beyond it here. So again, it might be we move closer to that 61.8 fib and fill this gap, or even tag the 18,400 area. Again, our 61.8 Fibonacci right below that area. NASDAQ's come up to just above this trend line right here from the October 2023 low, October 2023, and we're just there trying to bounce just above the 100 period. Even if we break this level, again, you can still come back up, break the downward trend line, and still come back up and fill these gaps, and then come back down. We would just reestablish it. Maybe you get a bottoming tail there. Maybe we redraw the trend line. Trend lines change all the time. Channels change all the time.